Recently, Adena Friedman, the chief executive of the NASDAQ, was espousing the successes of the stock exchange effort to make money out of the clamor for companies to be greener, fairer to workers, and more socially responsible. It is definitely the highest growth part of the business, according to her, referring to the revenues NASDAQ makes in its ESG unit, which advises companies on their environmental, social, and corporate governance policies while helping them meet disclosure requirements. Friedman said that the consultancy side of the business still generated the most demand, but that the bigger opportunity was selling software and data tools to help companies comply with the reporting requirements demanded by rating agencies, investors, and regulators. That's going to be the long-term growth driver for us, she said. Yet, one of the biggest threats to NASDAQ's ESG business comes from an unlikely source, NASDAQ itself. The company is engaged in a battle to dilute the US SEC's or US Securities and Exchange Commission's unprecedented climate change disclosure proposal, which would force companies to reveal their direct greenhouse gas emissions and have them verified by a third party. If enacted, the proposal will undoubtedly boost subscriptions to NASDAQ's Metrio and One Report platforms, which are intended to help companies measure and disclose ESG data. One of dozens of public companies to criticize the SEC proposal, the stock exchange is worried that the rules could hurt its core listing business. NASDAQ last year beat arch rival New York Stock Exchange at the venue that landed the most initial public offerings. The exchange has asked the SEC to rewrite the proposed rules, a move that will water down and delay the initiative. In a June letter to the regulator, NASDAQ encouraged the SEC to shift from mandatory reporting and institute a comply or explain system instead. NASDAQ said the climate proposal could deter many companies from going public because of higher compliance costs and an increased risk of facing litigation from investors. Michael Miller, an analyst at Morningstar, said moving from voluntary reporting to having people forced to do it would push companies towards the kind of tools being sold by NASDAQ and its rivals, which include the big four accountancy groups and several startups. NASDAQ's position on the climate rule can be seen as running contrary to the interests of their ESG business, which will be a likely beneficiary of expanded reporting requirements, he said. So NASDAQ's apparently conflicted stance makes financial sense. Its ESG business, while growing at a rapid pace, generates a fraction of the revenues pulled in by its core listing business. Although the company does not detail its ESG revenues, its investor relations and ESG segment generated $122 million of revenue in the first 6 months of this year from $112 million in the same period of 2021. Revenues at its listings business were $240 million. Listing is one of the most important business for NASDAQ, so they will try to protect this business, according to Omed Lau, an analyst at Oppenheimer & Company. NASDAQ is not alone in fighting the SEC's climate proposals. The biggest US corporate lobbying groups are against it, including the Business Roundtable, which has described the suggested rules as unworkable. But the exchange's opposition to a key plank of the ESG agenda is even so an uncomfortable position for a company that has burnished its socially responsible credentials to lure investors. Starting this month, August 2022, it required companies listed on NASDAQ have at least 2 diverse directors or explain why not. And some of the companies that are backing the SEC in its climate push are groups such as Microsoft and Salesforce. the kind of businesses that are known to be attracted by NASDAQ, or the kind of businesses that NASDAQ attracts. NASDAQ said, as a market operator, we frame our positions with a view to improving the overall functioning of the market to the benefit of all participants. So NASDAQ is currently caught in a dilemma over core listing units and expanding ESG business. The stock exchange is fighting US regulators' climate proposals despite risks to its own growing arm. So see what you make of all of these things concerning the dilemma NASDAQ is facing as it concerns the proposed rule that the SEC is pushing forward with. And thank you very much for watching this video.